While many dentists get out of dental school and jump right into work, others end up years into a practice and feel like they're chained to their chair or spinning their wheels. At Duckett Ladd, we've discovered that there are 6 phases of long-term practice success. On this podcast, we'll explore each phase of success and help you on your growth journey.
Hey everybody, Jared Duckett Ladd, Dental CPAs and Advisors, here with my business partner, Bill Ladd, and the amazing Dr. Michael Abernathy. How are you guys?
Good. You're starting off like it's an assembly of God, you know. I mean, you roll that flipped right off your tongue just like that.
Flipped off the tongue. I like it.
There's just not enough superlatives for you, Mike. I mean, we could go on and on here.
No.
There's just not enough time. We run out of time.
No, it had nothing to do with that. So.
I remember one time I introduced you as the doctor, the dentist, the author, the entrepreneur, and just went on and on. So now I just say amazing. It gets it all.
Yeah, it's just Mike. And really, I'm here. You know, it's funny. You know, you guys, we've talked a bunch about like the business of dentistry, and so it's really helped me understand this from a CPA's viewpoint, and hopefully the discussions have helped you to see it from a dentist standpoint. And I think the topic today is one of those things where it's like neither side really has been communicating well for decades, you know, and right. So I'm embarrassed as a dentist to ask questions that I probably thought I should know the answer. And you're not giving me answers because you're thinking, of course they understand this.
Right.
Because I understand it. And so I think this will be fun. But I think from the standpoint of having a sound business, you guys are going to give them a fundamental building block that if you're just starting a practice or you've been in practice for years, you can't operate without what we're going to talk about. So I'm excited. This is going to be important for everybody.
Well, Mike, I mean, as accountants, we're cursed by the curse of Sally, same as last year. It's how it's always done. We always do it this way, Mike. I mean, keep this P&L, all this stuff, these financials, man. We tell our clients, you got to know your numbers, but then we give them crap and they look at it and they say, well, what is this? This doesn't make any sense. And that's how you called us out. That's how we actually, I think, got acquainted, is that you actually called us out and you were like, what in the world are you guys doing as a profession? And we're like, you know what, not to mention, we don't even really know what the hell we're doing. So I think we kind of come together and build out something pretty cool here.
Yeah, and that's like the topic, guys. I mean, the topic, you know, is the financial statements, the profit and loss statement. And Bill, you said it. I mean, Mike, I know the first couple times we met, we kind of eased into it a bit, and then you're just like, what the hell are these profit and loss statements with this stuff that really doesn't show the true, I guess I'll say it this way, the true representation of actually what's going on in that profit or in that practice. Right?
Yeah, profit and loss statement is not profit and loss. Okay, and I'm going, so why did we name it that? Why didn't we just say, you know, expenses that have a tax consequence? I mean, you know, but so as dummy dentists, we see profit, we're going, oh, there's profit. We talked about this before we got on here, but literally it's not a week goes by that they're upset. Doctors are upset that, you know, this CPA says I've got all this, you know, on my profit and loss, said I've got all this profit. I don't have that profit. It's not in my bank account. Like, where the hell did all the profit go? Yeah. You know, so we need a format. I mean, for me, if I need it to be like my checkbook. I need to know what my deposits are. I can add those up and what I spent. And then I need to know, is that normal or not? Or am I doing good? Or do I need to make some improvements? And so I think what we're going to talk about today will clarify that and give everybody a very clear, actionable format to put this in. So,
and I think what we can do, go ahead, Bill.
Yeah, and to that point, Mike, I think you're exactly right. And this is what we tend to see people doing, is the financials become so either underwhelming or overwhelming that what they do, they start looking at their checking account, and that's kind of how they manage their business. You know, that's right. That is their management tool. And I think that, like Jared's going to unpack here, you know, shortly, I think we have built out something that will give them a better tool. And that's, in our minds, that's what a financial does. It's a tool for management. You know, that's how we see it, to make good management decisions. And I think we're going to unroll something here that's pretty cool.
Yeah, and I think what we can do is start with, and I'm not saying all accountants do this by any means, or all doctors out there listening to us, this is what their financial statements look like. But I think we can, I'm just going to do a quick screen share. and just show, this is just an example. This is an example, and we see different financial statements from new clients all the time. And this is a profit and loss statement for 9 months. And it's, I'll let you pick this apart just a little bit, Mike, and say,
Well,
like,
I
what's wrong
was
with
waiting. I was waiting for the good and bad and ugly theme song.
it?
Okay, and wait, and again, this is probably better than some, because I think in maybe this is the wrong term. I mean, we could compare to like a bad P&L compared to a good one, but basically there's probably some things that aren't good about this that could be better and more understandable. This seems extremely short. Incredibly short. I usually see it, it's 2 pages long, lots of line items, but still, like this one, it's just alphabetized. It's not like, so maybe we could discuss, again, this has got, I don't see, I could be blind here. I don't see amortization and depreciation on this.
No.
Isn't that usually on a profit and loss statement?
Typically, yeah.
Which you can't wipe your bottom with from a day-to-day basis. Okay, I mean, it's a tax consequence. I don't see debt payments on here, or what you normally see is what? Interest expense?
Yep.
Debt? I mean, you
They do have loan payment right here. I just saw it. So there's
loan
loan
payment. Okay,
payment.
so sometimes they use different terms, right?
Yep.
Okay, so that's not even standardized. So if taking a big picture here, one, there's no percentages over there. I kind of like to have percentages on there just to help me understand. I mean, it's not really grouped where, for example, I don't know, where's their staff salaries?
And that's kind of the overall, just overarching principle to a degree, is you kind of hunt and peck and search and figure out. Nothing stands out to you,
There's
right?
payroll. Yeah, it says
right here.
payroll
You go.
expense.
Payroll.
Payroll. Okay. Now, does that include the doctor? Yes, maybe not. Right? Or is the net income what the doctor made?
Right.
And then I don't. I see payroll taxes.
Payroll services.
Okay. Well,
Not sure what that is.
This is not a very good profit.
Right.
I'm sure this isn't the worst one you've ever seen, but
I've seen worse.
Oh yeah.
Okay. Okay. So let's talk about this from your perspective. In mine, let's take turns here. What would improve this, I guess?
So let me say this, Mike. I would see this being kind of a canned P&L, just like you said. QuickBooks gave them a format. We want to know income and we want to know expense. That's kind of the traditional accounting QuickBooks mentality, from P&L, income and expense. So we'll get to net ordinary income. So when I look at this, I see nothing that tells us, or in a summarized way, tells me how we're doing overhead wise, except in total. And even then, I'm not even 100% sure that it's accurate, because there's things in here that seem kind of strange. So, we are big believers, Mike, and I want you to unpack what they are, but that you feel overhead should be broken up into just a few categories. And those kind of become a driver of ratio. So, one of the first things we see, and we've always tried to incorporate, is breaking it out into the proper categories. So what would be those proper categories that you would want to see, Mike, in this?
Yeah. I mean, I kind of want to, I divide it into 7 categories, and whoever's listening to this, if you want a copy of it, I can give you a link. It's just www.supergeneralpractice.com, and they can get that Super General Practice book, but it's supergeneralpractice.com. Chapters 16 and 17 go over overheads and benchmarks. So I think if you use a Stephen Covey kind of, theory strategy here, begin with the end in mind, I divide this into 7 categories. The 7th category would be anything that was spent on the doctors, like the automobile expense in this, the doctor's continuing education, their malpractice, the storage unit that they have that they keep their boat in, whatever it is, it's going to be the seventh one. So the other 6 categories really define the true overhead. Okay. And again, I think most doctors kind of look at it at business that way. How much did I actually make? And then you guys can take care of what the taxes are and stuff. So I divide it into staff compensation and understaff compensation. And you can go to the book and it details it in great detail. But, you know, the staff salaries, their benefits, workman's comp, their continuing education, maybe staff meals, anything at all. I even put my CPA and my attorney in there because, or if I hired a consultant, I put him in there because I'm hiring you guys as a part-time employee. Mm-hmm. And if it were ideal, it would be around 25 to 27%, 27 with the attorney PA. Next one might be facility cost. And again, I wish I hadn't called it facility cost 40 years ago, but I did, because it's not exactly just your rent, but it would be rent, equipment expense. If you were buying a practice and paying it off, that would go in there. Taxes on your facility, insurance on your facility, internet. I mean, you know, again, it details it in great detail, but it should be around 7 to 9%. Marketing, anything we spend on marketing, internal or external. Marketing should be around 3 to 5%. Dental supplies should be at about 6%. Office supplies should be less than 2%, and labs should be around 8 to 10%. So if you had an ideal overhead, it would be somewhere in the range of, let's say, 51, 52% to maybe 60%, somewhere in that range. Mm-hmm. Okay.
Yep. So if you look at this, Mike, you know, basically what you're saying is there's no categories here, and that brings into called the ratio. You had mentioned the ratios. You'd like to see ratios, and you're not talking about advertising promotion is this percent of total income. You're saying salaries, employee cost is this percent, this ratio.
Yes. Yeah. Okay. So if I were looking at this, Bill, we would have those 7 key practice or performance indicators. They would be in bold, maybe a bigger font, and then have the total amount, and it would have the percentage. Now, let's say we had a for lack of a better word, a bad P&L, and it was 2 or 3 pages long. That's fine. I'm not going to eliminate any of these minor categories. I'm just going to place them under these larger categories so that when I glance at it, the large categories 1 through 7, 1 through 6 for the real overhead, 7 through the doctor. So that's all I see. I see that bold total for staff compensation and the percentage. And if it's around 25, 27%, 28%, I'm not going to look any further. Everything.
Yeah, you want to see those numbers straight from the financial statements. You don't want to have to do extra work to get there.
Right. But let's say we looked at dental supplies, it was 8 or 9%. I could look back and go, I bought a dental X-ray. Instead of depreciating it over the effective life of it, I just bought it as dental supplies, and it was a one-time off deal. I'm not going to worry about it anymore. So I can still do it. So it's got to summarize these key performance areas, and it's got to be able to understand and read it quickly. Otherwise, we won't do it, because I like to look at this weekly. Mm-hmm. You know, the major groups are highlighted, and we're always going to compare it to a benchmark.
Yeah, which you just gave us and are in your book.
Yeah. Oh, okay. You know, one other thing too. If it is organized this way, and this should be true for any system you put in, it is scalable. This is a good practice. I mean, they're doing $1.9 million, and that's just 9 months. Mm-hmm. Okay, that was a busy office. Okay, so it doesn't matter if you're doing 400,000. It doesn't matter if you're doing 5 million. It's got to be scalable, so we don't have to constantly change the format to fit your particular situation. It's got to be, you've got to be able to access it. Again, QuickBooks, Quicken, Peachtree, anything you use should be able to be accessed, and so you can view it. Yeah. Now this one's missing the percentages, and certainly it's a key click to set this up. where we could compare it to last year too in the format. So you can.
So Mike, I mean, right now we've already hit on two things we can improve. And in all fairness, there's a lot of reports, P&Ls we see, including what we did before we talked to you, that did have categorization, you know, maybe had some of those ratios. But you said something earlier that is going to just blow accountants' minds, which is other things that are not necessarily included here. I think you said debt payment or owner's withdrawals or things like that. So that's cash out the door, but that's not on a traditional P&L, right? That's what an accountant's going to tell you.
Yeah, and again, when we're looking at, was this a good month or bad month? You know, I need that in there.
Mm-hmm.
Again,
and a lot of accountants, I would say, are going to say, well, we got a cash flow statement over here, but it's all mix and match. It's like, well, you got this that goes to this, and it's not truncated, simple, easy to use, at a glance, adding value document.
Exactly. In a way, we're taking, you know, the gap, you know, the balance sheet, cash flow, the profit and loss statement, whatever you consider to be generally accepted accounting principles, and blending it into a format that is great for the dentist. And from a CPA standpoint, as long as they understand that they produce this quote profit and loss statement with debt payments in it, that it's no problem for them to do the taxes and stuff that they're doing for you now, as long as they understood that they did it. But it helps us so much. So sorry, Bill, Jared, it's not all about you. Okay,
I get it.
Right. And I think that's
okay.
a problem that we have. I mean, as CPAs, you know, we feel that it's the way that it's always been done. Sally, right? Same as last year. That's how it's always been done, guys. So now we've got some ideas, some thoughts. We got three things. We could break it down into categories. We could do ratios. And could we incorporate cash flow statement types items in here to one report that in theory is going to be an optimized management tool? So Jared, let's take a look at things that we've a report we've collaborated with Mike on to see how it looks a little different.
Yeah, so at first it might seem a tad overwhelming just with a lot of data thrown at you. But if you just dive deep, I think it hits on, and Bill, I love this title. You call it the triple threat, you know, because it hits on crazy categorization, percentages, and the cash flow. We'll kind of go over that. But you can just see, this is a monthly deal here, right? It's just showing month over month from the prior year. And we do have other reports that would show year over year. But you can just see, you know, going back to those three things, Mike, that you talked about, categorization. So you can see here, you got the boom, the employees, the supplies, the lab, just right there. Kind of hits on those three you're talking about. And then Mark, you see how easy that is to see? It just sticks out pretty quick on what that needs to look like. So dive in here a little, Mike, talk on this.
I mean, and again, I'm going to be critical here too.
Sure.
Okay. And because I'm hoping, just as in a frank discussion, that we've got a great format. If there's a little tweak we can make to make it even better for them, that would be awesome. I like the fact, okay, let's just take, I like this. You couldn't get away from it. He had to put cost of goods sold in there. It's so accounting. Okay. In the light color, I don't really see it. Okay. That's awesome. Okay. But in the cost for compensation for employees, okay, you've got the ideal right beside it. Okay.
Right here.
And you've got things listed on here that you wouldn't normally have under salary considerations, like the workman's comp, the disability, the training, staff meals. The only thing that I probably would help me, now I'm 72, 73, so I would want the totals that you have in bold. If you could make those a font bigger or two, okay. I mean, leave the other fonts the same size, but I want it to really jump out at the doctor, right?
Yeah.
So any way we could improve, you know, do that. I mean, granted, not everybody has, you know, color printers. I mean, everybody does now, but I mean, you know, even highlighting those 6 areas, you know, just brings your eye to it. But again, once you've looked at this format once, it only takes a second to figure out that, you know, this is what I need to do, is just slide down to the end of employees and boom, it's there. Now, in that same vein, okay, you've got laboratory fees. I think that should be bold. Okay. Because generally under laboratories, it might have like ortho, it might have you know, Crown and Bridge, you know, lab or something like that. But it also would have, if you have a CIRAC or E4D machine, it should have the cost of materials in there. So it wouldn't be under dental supplies, it would be under lab, because each one of these numbers, and we didn't talk about it, each one of these numbers means something. And let's say your lab fees were only 5%. Okay. Well, and your dental supplies were 9. Then I'm thinking maybe they do have a CIRAC or E4D and they put the things in the wrong place. But if you're not having fees of around 8 to 10% in laboratory fees, I'm thinking we've got a very non-assertive doctor who isn't selling dentistry. And so when I say, I guess the last category of things I'd like this to do is I want it to be actionable. So we look at it and we see something wrong, we can act to fix that, okay?
Yeah.
So again, I think I would have highlighted the laboratory because in this particular case, the line item and the total are on the same line, right? Okay, so that's that, and you know, would be, and the same thing for the dental supplies. You know, I probably, or clinical supplies, the total should be highlighted, so it would be the same. You know, you have that right. I'm sorry, I'm looking at this too, but you do have that under whereas clinical supplies, but you don't for laboratory.
Right.
Yeah.
Again, laboratory is one of those things that I find very, very telling about a practice. You know, is that if they don't, then maybe they're not presenting comprehensive dentistry. Maybe.
So real quick, Mike, let me kind of pause you here because I think the important thing that we're doing, and I think this is the mindset that we're trying to push forward, is that just by looking at the laboratory and the dental supplies, and we didn't even touch on employees, which we could have, which is sitting at 43%. In your mind, you're critically thinking of why are these off from what a general dentist, you know, optimized practice should be, 8 to 10% lab, 4.67. You know, what does that mean? You know, that's exactly what this is designed to do. Those ratios are designed to draw your attention to what's broken and what needs to be fixed first. Exactly. Is that fair? Yeah, absolutely. And again, in that book, the for general dental practice, it will go into details about, well, if it is 43.82%, what could possibly be the cause, and the remedy. So, you know, I guess the combination of those actually give them the actions to take, but knowing that it should be certainly between 25 and 30% and no higher for the employees, then that's hugely out of the way. So, and I know you guys have said this before too, everybody watching this needs to take a moment and figure out what 1% of their yearly collections. So $1 million practice, 1% is $10,000. So I know this isn't $1 million practice, and I'm not smart enough to do this in my head, but if it were $1 million practice, in particular case, this one being about, if ideal was, let's say 25, we're short what? Almost 20%.
Yeah. So $200,000 worth of off. $200,000 worth of money that would have gone in that doctor's pocket if they had been mindful of their condition. Now, one of the things that we mentioned before is that it's accessible. If you get this 3 months after the month closes, it's not actionable. Okay. Right. That's why you need to look at it on a weekly basis. If I'm doing crappy after 2 weeks in a month in one category, I'm going to find out why and try to correct it. Not that I can get it all corrected in 1 month, but I can minimize the negativity of that. So instead of being a thermometer where it just reads the temperature, we become a thermostat where we can control the temperature. I think it's important to understand that this isn't just boring numbers.
Mhm.
These are flashing red lights on the console of a nuclear reactor that if we don't fix, it's not going to be a good result pretty quick.
Yeah.
Yeah.
And I love the concept that you make all the time, the power of the 1%, because we have clients that we work with all the time. And like, we kind of go over this with them. And it's like, hey, you know, my lab fees, they're only, let's say team compensation. Well, it's only 3 or 4 points high. And I'm like, okay, I want you to say that a different way. Put that in the frame of dollars. It's only $35,000 to $45,000 high. And then once they say that way, it's like, oh, that's real money. Instead of 2 points,
real money.
it's $45,000.
Yeah.
And you bring up a good point, Mike, that, you know, one thing we tell people is to make good management decisions, this data needs to be solid and needs to be timely. And whether it's you or whether it's somebody else doing the bookkeeping, there needs to be touch points so that you can pull these reports up at an interim time period, see them, and see what's broken. Now, a plug for your book is what you can then do is take these ratios and build out some metrics and KPI metrics. You give great ones in your books. You know, like a good example, if your employees are off, revenue per FTE, you know, what's a good number and where are you at? And what's that telling you? And I think using these data points in conjunction with good metrics and good understanding of how to try to get to work and start fixing things, that's something that's going to move the needle to 1, to 2, to 3, to 4% automatically. I mean, it's going to change relatively quickly when you start putting that level of focus on it.
So let's dive a little, go ahead.
One of the good things that y'all have done, I can tell you've gone back and looked at a bunch of bad P&Ls and made sure that, I mean, that if there was a line item that you saw in one of these others, you've put it in here where it belongs. We're getting ready to talk about the marketing side. I thought it was interesting. Under the marketing, I see oftentimes line items for gifts. And I assume that usually means patients and stuff.
Right.
So go under marketing too. So again, it's not important that, you know, Bill or Jared put something under one particular category. It probably makes sense from a logical accounting deal, but I'm okay, you know, if it's in another one, as long as you understand that it's there, it just needs to make logical sense to you. So I think these 6 categories are very simply logical to most people. And they go, oh yeah, of course that would be marketing, or of course that would be, when you mention it, I mean, most people wouldn't think that under the employee deals that workman's comp would be an employee expense. And so it makes, you've done a really, really good job here. So,
well, let's dive into the third point. So Bill, you hit on categorization and then the percentages is almost the cash flow, because a standard GAAP profit and loss statement, looking at it, a lot of times it doesn't show the true profit or the cash flow in your business. So if you kind of look at this, I'm going to dive a little bit deeper on here. So we got principal payments on facility debt. So this is paying down on the building. Boom, that goes into a facility.
Yeah.
And maybe accountants, if you're listening to it out now, you're like, Jared, that's illegal. It does not belong on that statement. Well, caveat here, this is not a GAAP basis financial statement. We get it. We're trying to provide the value to the end user that makes the most sense for them. But you can see where that number is on here. And also, I'm going to skip a little bit down. This is that 7th category you mentioned, right, Mike?
Yes,
doctor
the doctor
expenses.
Yes.
So everything here, what we say below the line, right? You can see here, let's just say this is an S corporation, that they're paying themselves a salary, but also taking out owner withdrawals, right? So typically on a profit and loss statement, you're not going to see the withdrawal side of it, because that's going to be a balance sheet item. So it's just the cool thing about putting the cash, it's almost the balance sheet, the cash aspect on here, is that if you were to look at this profit and loss statement, I kind of say normally, you know, without the doctor's expenses, it would show a profit. But if you look at it now, it's like, well, this thing actually lost $7,600. I get the doctor took out 22, but if it continues at this rate, right, you're going to see profit, but you're going to run out of money in the bank.
Right. Exactly.
Yeah. So that's kind of the hybrid. That's that triple threat, that it gives that one statement, that value of exactly what that practice looked like for the month, year to date, et cetera.
So let me kind of take a real quick tangent here, Mike. I know you love tangents. You and I are both kind of geared that way. We like to go off in weird directions. But I think you and I were talking to a gentleman at a mastermind who was looking at potentially selling this practice. And so we have net operating cash flow here, and we have these doctor expenses carved out, like you said. When you look at either acquiring or exiting a practice, having those kind of data points, the operating cash flow and how that works, and operating P&L, that is the kind of stuff that's going to set you up to be able to have a discussion with maybe a potential acquirer that really shows them that the true financials of your business, and you've got an operation that's dialed in. Is that fair? Is that a fair comment?
Absolutely. I mean, any broker or CPA can normalize a profit and loss statement.
Yeah.
And normalizing means let's take out everything that really went to the owner that is potential profit if the buyer produces what this doctor produced. And oftentimes it makes the practice look better because it is. And then, it's really looking at it in the true light of day that, okay, this is really your overhead, and this is really what you took as payment. I mean, certainly it's your malpractice is a deductible item, but, this is how much was spent on you. So that's great. It is always difficult, especially in this day and time when people want to talk about EBITDA, earnings in a practice, and then how you might define that. And it's all over the board, what earnings is. But truly what earnings should be is, the overhead, and then paying the doctor, and then what's left over is going to be profit. In this particular case, I think seeing the negative sign, it'd be nice if it automatically changed to bright red when you put
Right.
Okay. I mean, the doctors we're not, I'm a doctor. I am not that smart. If it lets up in bright red, I'm going to notice it on the page. And a lot of times I'm going, what is that little dash in there? What does that mean? It means you have the money to do that. You took that out of operating cash.
Well, I think about this too, is you'll notice here at the bottom, this is not designed to depict tax basis income, right? This is not, you're saying, well, that's not my taxable income. I get that. And so what's not even on here too is taxes. You're actually probably going to have accounting profit in your business that you're going to owe taxes on, but you're losing money every month here to a degree. So don't think that, hey, if you guys just use this every month, you're not going to, we would have another statement that shows tax income.
Yeah.
To make sure
and that's easy to get to.
Yeah.
That's not a hard report to run. We can get back to taxable income, so we can calm down and say, that's not a problem. We get back to, I think the big thing I love about this, and you said it perfectly, Mike, is this is a scalable product. It doesn't matter where you are. You could be a $400,000 practice all the way up to a $2 million practice, $3 million, whatever. And it kind of serves a couple of purposes. And number one, it really kind of helps you get a control of overhead creep. That's the 1 or 2% you're talking about. Those happen over time, and they just can become so overwhelming, and it's affecting your take-home pay. It's affecting how your lifestyle. But if you can get that under control, then it really starts to set you up for what your next is, and whether you want to exit the practice and maximize the exit that you have with the potential sell, or whatever the case may be. They see good data, they see good profitability. I think you and I have talked that is a much more desirable effect. So it has the ability to help you along the way of the journey of your entrepreneurship, and then also on that tail end. So it's a lot of great features to that.
Yeah. One of the things, I think a lot of doctors want to be competent leaders, managers. Having a format, having technology work in your favor makes that job easier. You just can't manage what you don't measure.
Yeah.
But if we use too many numbers, too many topics, too many sources to bring together to get those things together, it makes it infinitely more difficult to manage and make wise financial decisions. I think this format, more than anything else, allows you in a glance to make financial decisions in your practice, where a profit and loss statement by itself will not, a balance sheet will not, cash flow will not. It takes, all of these things. And by blending this and creating this format, we've created something that really, truly is actionable. And it's so obvious that you've got a challenge in a particular area that it becomes part of your thought process, and you'll deal with it every day. And it'll go away. It's easy if you know it's a target you need to hit.
It's in front of you.
Mhm. Yeah. So, I mean, you guys listen out there, what I would do, I use your quote all the time. I think it's Peter Drucker's quote: what gets measured gets managed. First off, are you looking at any sort of numbers, I'll say, on a monthly basis?
Right.
If not, you got to fix that, right? Once you start looking at it, or if you are now, what do those numbers look like? What's the format? Is it actually telling you the true representation or what your practice looks like?
Right.
And if it's not, take a peek. First off, get Mike's book.
Right.
Look at the breakdown of the 6 overhead, categories. You got the doctor's number 7. Set your stuff up like that. It's so simple. It's brilliant. That's the thing. I mean, what you've done is just brilliant because it's so simple. And then take a peek at this format here. We work with Mike to try to get this triple threat, if you will, financial statement. Take a peek at this. Go to your CPA, see if they can tweak things around. Just say, hey, can you tweak it here or there so that it shows me a little easier, and get their feedback. Because if you make these tweaks, it's going to show you better data on a monthly basis, so the true, financial situation of your practice.
Jared, is there any way that they can get a copy of this format?
Yeah, for sure. Yeah, the best thing.
And again, the book is free. I mean, I don't want your money. I want to have this knowledge, and so please, regardless of where you are in your practice, get a copy of that book at that website. And then if you have a way that get a hold of this format, this is something you should do. I mean, if you heard about this on Friday, it should already be on your number one thing to do on Monday.
Mhm.
This can take months to do. It should be, you should incorporate into your business strategy.
Yeah, and we'll include a link that anybody can click on the link, and then anybody can download this, and take a PDF copy. And again, we know, I'm going to say this again, because I know there's people out there, they're like, we know this is not a gap basis financial statement. We understand that. We put that on the side right now. We're trying to add value to the doctors, help them make better financial decisions. We always keep gap basis or whatever that we have to on the side, but we want to put the information in front that people need, and get this accountancy thing out of the way, right? You called us out on it, and we're taking it to heart.
I've had accountants, in a nice way that I'd never met before, text me and go, I thought this was the stupidest thing in the world to do, but somehow my client thinks you walk on water, and they made me do it. Within 2 months, their profit went up, their overhead went down.
Yeah.
Just because it became something that they were focused on, and they had the format and document to do that with. So,
And as an advisor, in our firm, it's helped us. It helps us to identify the holes in the buckets, right? I mean,
That's right.
just like you looked at that P&L that we had, that sample, and nobody's real numbers, but a sample, and you saw what was broken. That's what we tend to do. So I have one last kind of little bit of a tangent question, but I'm just curious to get your take, Mike. Anytime we have you on here, we try to maximize the value. You believe in having kind of a staff-led practice. What's your thoughts on how open it, especially in particular in this format, you should be with your staff?
Yeah, I shared, part of having a staff ownership mentality. I mean, instead of having, there's a book called, hiring an employee is always a bad idea. Okay, I mean, I want partners in my practice.
Yeah.
Or, because owners and partners act differently, but we struggle with overhead and cost and finances and paying people. The best way to do this is share these percentages with you. You don't have to use the numbers. You don't have to give a line out, but I would use the totals and, give them a benchmark, help them understand the business of dentistry. It has a secondary effect too, if you'll do this. In that book, those 2 chapters on benchmarks and overhead, you could take chapters in that book and do staff meetings, but the secondary ripple effect of this is that when you have to teach this to someone else from them, I mean, I teach a Sunday school class to 300 kids on Sunday. I learn more than they ever learned. So I become more accountable in a way. But I also realized that I really haven't been communicating the things that really would be beneficial to my staff, my office, my team, long term. And without sharing those, there's always going to be a predisposed supposition that you're making all this money and you're a greedy so-and-so, and they actually see that, that, hey, some of these things are out of line. It's obvious.
Yeah.
How do we fix it? And then surprisingly, I mean, my staff came up with ideas I could never think of to solve some in those first 6, some area that, I'm challenged with it, like I think in the first one you showed it was 57% staff or something like that. Like, wow, how do we become more productive with the same number of staff?
Yeah.
Or how do we, maybe we lose a person, we don't hire them back. I mean, is there a solution? And surprisingly, they come up with great ideas. And again, if you implement the ideas, even with a tweak that they brought up, you start that ownership mentality. It went, he values our opinion. And then they start talking more. Okay.
Staff-led is huge. Literally just conversation Bill and I had. Dental practice, 20x, $150,000 of production to 3 million. And what was the number one thing they said, Bill? Staff-led. And Mike Abernathy.
Right.
So,
No. But it's a way, I don't want to tell people what to think. I want to help them not think like a dentist and really, again, not tell them what to think, but help them think differently about their businesses. And all of these ideas have come not from dentistry, but other small consumer-driven businesses through the years, through the decades. And we took the best practices and then denticized them to make it helpful, easy, and simple. You kept saying, this is so simple. It generally is simple when you get it right.
That's right.
So please take this and run with it.
Yeah, this is good stuff. What we'll do, we'll put a link there, Mike, to your book, and then we'll put a link there too, so anybody can download this. Again, we think it adds extreme value. Take it to your CPA and see if you can incorporate it into your practice. So anyway, Mike, Bill, appreciate you. If you guys have questions out there, ping us. We're here to help, all of us. So we'll talk to you guys soon.
Bye.